Welcome to today's webinar on general business conditions. I'm Haley Shenander of the Federal Reserve Bank of Minneapolis. Before I turn it over to our speaker today, I have a few housekeeping items. Slides for this presentation and a copy of the video link will be emailed to all registered attendees next week. Ron will be entertaining questions at the end of our presentation. If you have a question, please type it in the chat box on Zoom. We'd also love to get your feedback at the end of this presentation, so please take a moment to fill out the brief 3-question survey that pops up in your Zoom window when you exit the webinar. I also want to note that the views expressed during this presentation are the presenters and not those of the Minneapolis Fed or the Federal Reserve System. Now, before we get into the survey results, I'm going to provide a little bit of background on this general business survey. The General Business Conditions Survey is one of the largest regular surveys of businesses conducted among the 12 regional reserve banks. This is only possible thanks to our partnerships with chambers, government agencies, and other business groups who send the survey to their contacts on our behalf. So huge thank you to all of our partners who will make this possible. Now, the survey we're discussing today was conducted between January 16th and February 6th. We've received 602 responses from business owners across the region, which is a great turnout. So I just have to give a huge shout out again to our partners who really brought in a lot of responses this round. We continue to see good balance by both firm size and sector, but it's important to note that these responses come from a convenient sample. Because of this, the results of the survey should be seen as more of a snapshot of current conditions and interpreted carefully. I do have some quick takeaways from the survey before we start digging into the data. For one, both revenues and profits were more negative. While large firms were still outperforming smaller firms in this area, the gap narrowed. Now, this is a bit odd because overall, the economy has been quite healthy in recent months. But most states in the 9th District have been experiencing both slower GDP growth and employment growth than the US. That being said, there is still demand for workers, even though it has cooled quite a bit since last year. Meanwhile, labor availability, while still a problem, has improved somewhat and wage pressures have moderated. Overall, the sentiment for Outlook was modestly positive. And with that, I'll let Ron take it away to talk about revenue and profits.
Thank you, Haley. I appreciate the intro and the setup for all that. And before I get started, actually, I just want to give a quick shout out to Haley, who really is the brains and brawn of this survey right now. She has done a great job expanding our partnership with lots of different organizations to increase the number of responses that we've been getting. And I think that's really important, not only for us to get better intelligence, but also just to show more and more businesses that we are interested in their feedback. So again, quick shout out to Haley. Thanks for all your work on this. So let me start with kind of the macro view. We'll talk quickly about revenue and profits, kind of the most important things that I think everyone's interested in. But let me give you a quick setup for how we do a lot of these charts. So in general, we're asking a multi-level question and typically over different time periods because we want to get both the seasonal idea as well as a year over year and a future outlook. And many of these charts will have this kind of red and green shading. Green generally means good or growth. Red means decline or negative. And the deeper the color, the more it is on one side of or the other. So what we did here in terms of the first question, recent quarterly revenue, you can see here that we compared it to prior quarter, same quarter as last year, and then expectations for the future. And in general, what we're seeing, I think, unfortunately, is that we're seeing more firms are seeing lower revenues. One of the things here, now we can't tease it out really to a detailed sentiment, is that we're hearing that the unseasonably warm winter really impacted a lot of respondents, particularly small respondents. I'll talk a little bit about that. But in general, I don't think there's really any of the different timeframes that suggest that firms are really seeing a lot of activity compared to other periods. Quarterly profits, is really not much to say here aside from the fact that we're continuing to see quarterly profits fall on really from quarter to quarter as well as the same period last year, and it doesn't look like they expect things to change very quickly. We also like to take a look at things kind of a little bit longer over time. So I'll show you a number of charts that tell you what how similar questions have fared over time. So in terms of looking at by a year over year standpoint, again, we're kind of seeing the same revenue trend is worsening slightly. And that's really not expected to change much. So the chart on the left is the recent year over year over the last 3 survey periods. And what you've seen is that in July, we actually saw a little bit of a bounce back in terms of the share that were negative versus positive. And in this most recent survey, we saw it dip a little bit more negatively in terms of the number of firms that are seeing more negative revenue trends versus positive revenue trends. Unfortunately, if you look at the chart on the right, it doesn't look like they expect things to change. Also, firms reported a little bit more negativity in terms of what their revenue outlook was going forward over the next quarter. So we also ask firms to give us some of their traits so we can try to take a look at the data from a number of different angles. And I say caution tape here because the convenience sample that we use through partners gives us a somewhat lumpy response in different ways. But I wanted, in the interest of transparency, to give you a little bit more idea of who's responding and where. I want to give you just a few ideas of how some of those results pan out, some of which I really want you to be very cautious about, but especially as it relates to our partners. They very often want to know, because most of our partners are state-based or they are located in one state, like the Minneapolis Chamber of Commerce. So they want to know how particular responses fall out geographically. What I will tell you, though, is unfortunately responses by state are pretty idiosyncratic. And we tend to see lots of certain kinds of firms, because of the partners that we have and maybe their ability to generate responses from their members, that things are a little bit overweighted in certain sectors for certain states. And that's why I would really ask that you interpret this particular chart pretty cautiously. But just to give you an idea, Montana has the finance, insurance, and real estate sector. A lot of people respond in that sector. For South Dakota, the Retailers Association there is really good about getting their members to respond. And in Wisconsin, especially where we are targeting, a lot of our responses are kind of in the north and northwestern part of the state and western part of the state, where there's a lot of accommodation, smaller accommodation, retail, and food. And we had over half of our responses from there were from that sector. And the reason I note that is that we have heard a lot of responses that there's just been a really bad winter in terms of winter tourism. That's what they really depend on during the winter months, are those snowmobilers and ice fishermen and skiers and things like that. And they really had a bad winter really across the district. And so again, some of these responses really suggest that this is not necessarily a great way to look at the results. But again, because our partners are interested in those, just thought I'd talk briefly about that. Similarly, we're very interested at the Minneapolis Fed about how different sectors are responding. Here again, because we don't necessarily get even responses as it relates to their share in the economy and other things, I would ask that you take this also with a grain of salt. But we are seeing some results here that kind of reflect what we're hearing in the economy. We know that manufacturing, construction, and finance, insurance, and real estate have slowed. So that kind of matches what we're hearing here. Again, we also know that the retail, accommodation, food, drink sectors, that we know that they've experienced some recent problems given the bad winter. These are also smaller businesses, and that tends to have an effect also. And let me talk a little bit about that. So one of the areas where we've seen very consistent results from in terms of our survey over time is getting results by firm size. And here we use full-time equivalent employment. So kind of roughly small firms versus large firms. And we have seen very consistent results over the course of this survey in terms of who's doing well and who's doing poorly. Unfortunately, for small firms, they tend to be performing worse over time. They have performed worse than large firms in terms of their revenues and profits. What I would say is kind of the bad news on that is this survey showed a little bit more compression where larger firms were seeing a little bit more negative trend than they had been if you compare it to the smaller January 2023 chart that I have there in the right hand corner. You're seeing that there's a little bit more compression of results across size, but you still are seeing that, especially those firms with 10 or less employees or sole proprietors, they have always struggled more in this economy than larger firms have. Here, I want to talk a little bit too about that compositional effect. So one of the things that's been good in this survey is we're getting more responses. We're also getting more responses from small firms, and that likely has some impact on the overall negative trend that we're seeing. Again, because small firms have been seeing kind of consistently poorer results, the fact that more of them are responding and they're a bigger share of our response pool is likely pushing this a little bit more negative than if things were always consistent in terms of this particular measure. So I just wanted to point out that in the July 2022 survey, so roughly 18 months ago, the share of respondents in that survey was about 49%. In this survey, it was 61%, so it's not an inconsequential share shift. It does still underrepresent the share that those types of firms have in the overall economy, actually by a fair amount. But again, I think overall, I think we have a really good composition of firms. They're a little overweighted in large firms, but large firms also represent the largest share of overall economic activity. But we do really get a good snapshot of small firms as well. But I just wanted to share that some of these factors of composition, I think, are having an influence on overall results. And again, just to share this this particular cut with firm size is that quarterly profits we're also seeing is fairly not equal, but it's a little bit more so than it was if you went back 3 or 4 surveys ago. Even compared to just the last survey, what we saw is actually this is an improvement, especially among larger firms, in that they saw a little bit better profit outcome this survey versus the summer survey. And I also want to point out too that there's a lot of red on here, and you hear profits. This doesn't mean that this is the share of firms that are unprofitable. What it simply means is that it looks like we're getting more and more margin compression at the very least. Certainly, there are some here that are probably seeing some negative profits, but again, I think overall what we're seeing is that there's just been a lot more pressure on profits. And with that, we're going to talk a little bit about work and wage trends, and I'm going to hand that back over to Haley.
Great. Thanks, Ron. So let's talk a little bit about what we saw with workforce trends. With hiring demand, there is some mixed news here. Here on this chart, we're comparing last year's surveys in yellow and teal to this year's results in red. On the bright side, we see that many firms are hiring in some capacity, whether it be that they're hiring to replace turnover or hiring seasonal staff. However, compared to last year's surveys, a much higher share has stopped hiring and more firms are cutting staff. You can see on the very far right there, there is a much smaller share that's hiring additional workers to add to their staffing levels. This is a decent signal to us that there has been moderation in labor demand. It's still mostly healthy, but there has been some significant cooling here. We can also see that many businesses expect their staffing to be flat in the near future, but a higher share expect their staff levels to increase than those that expect staff to decrease. That being said, you can see that there is also a share that expects higher staffing has decreased over the last few years. So overall, we do see that many firms are hiring, but just because they're hiring doesn't mean they are successfully finding workers. We can see that many firms still find it difficult to hire necessary labor, but to a lesser extent than last year, suggesting some improvement in availability. When we ask about what the biggest challenge has been for hiring, most business owners cited that applicants do not have the right skills or experience. And not far behind that, they said that wage expectations are too high or that they're simply just not getting enough applicants. Now, we also asked businesses what they were doing to try to alleviate these labor availability issues. Keeping in line with the improvement in availability and the slowdown in hiring, we see that firms have pulled back on most of these methods for attracting or retaining workers. Increasing wages has been the main way businesses have tried to improve hiring, and it still is, but we see that that has pulled back over the year as well. Looking more closely at wages, we see that wage growth is still strong, but somewhat stabilizing this year. And like hiring, large firms reported raising their wages at higher rates than smaller firms, which likely goes hand in hand. And with that, I'm going to pass it back to Ron.
Thanks, Haley. Yeah, really interesting workforce trends. I'm hearing, when I'm out on the road, I'm hearing many of these same things from firms, and so it's really useful when we get all of this data from so many firms that we're kind of hearing consistent messaging. We also hear a lot about challenges from those firms when I'm out on the road and from this survey itself. So we asked firms, if they would pick the two greatest challenges to their operating capacity and productivity. And there's just a couple of things I would like to point out here in this chart. So if you go kind of left to right, I think the important thing here is that we saw an uptick in the share that see price increases or inflation as their biggest challenge, or one of their two biggest. If you go over high interest rates, I think we know that that's also a problem, and it stayed very stable. And then a couple of the other ones here, labor availability, we are hearing that labor availability concerns are easing a little bit. I wouldn't call it a situation where things are good, but again, better is an improvement over what it was even just a year ago. The reason I put a circle around government taxes and regulation, you see a notable increase in that this time around. Part of me says maybe we're finally kind of getting back to normal when businesses really do have a lot of concerns about government regulation and those kinds of things more so than other things. I also do think, though, that this is this might be a little bit Minnesota focused in that there has been some legislation regarding sick time and other things that I think businesses are now maybe a little bit more worried about, or it's of a concern maybe more than it had been previously. And then supply chains kind of over there in the middle right is that we are hearing very consistently that while supply chains are always going to have some problems, they are the extent to which that's a problem for the business is definitely lower on the ranking. In terms of prices and inflation, the previous chart said, yes, still a problem, big problem. But what they also told us in a more granular way is that price pressure is improving. Again, I wouldn't say that this is a good picture necessarily. This does show still fairly notable inflation, especially on the wholesale side. That'd be the chart on the left. And then the chart on the right would be the final prices to customers, that retail inflation. But you can see that there has been a steady easing of the price pressure that businesses are reporting both from their vendors and then passed on to their customers. So I think that is a good sign as well. We also asked about the current impact of interest rates on their business operations, and we didn't expect very good news here, and we didn't get very good news. What I would say is that those that are seeing a really significant impact is growing, at least moderately, and those that are seeing modest or little or no is kind of evening out with the others. We also ask if there's a positive impact, just because we have to throw it in there, and there are a few that do, but not surprisingly, it's a pretty small share. Excuse me. And so now the last question we ask is outlooks, because we always are looking. We want to go ahead and see or hear what businesses have to say about what they see in the near future. And I would say there's not great news here. It's not terrible news. The year's outlook has softened slightly compared to the last 2 years in January, and we want to kind of keep it on a January because, again, from a seasonal standpoint, it's a better comparison in this case. I do want to point out, though, that it's still net positive. I don't think that's a small matter to note. Again, given still the many pressures and some of the concerns that are out there, the fact that businesses are still optimistic overall, I think, is notable. And it's also net positive across all sizes of firms. Again, knowing that small firms tend to see more negative outcomes, I think the fact that they are a little bit more positive than their recent activity has been, I think, is a useful sign. So just some quick final thoughts. So revenues and profits, they continue to slide. I think there is some of that decline is likely tied to the fact that we're getting more responses from small firms. I would not say you're not going to reverse that trend, but I do think it is probably accelerating or weighting that response a little bit. And the fact that we have seen a very bad winter tourism season, I think maybe also influencing some of the overall comments. Labor demand still positive. I think that's a really good sign, but it has slowed, and we have to acknowledge that businesses don't seem to be looking for quite as many full-time employees as they had been. Inflation still a concern. The Minneapolis Federal Reserve System certainly knows that. There are some important pressures that seem to be easing right now. Labor is more available, and wages are also coming down, even if they're still maybe elevated from what firms are used to pre-pandemic. And the outlook is still modestly positive. I would call it cautionary. I think businesses, as a rule, have to be optimistic going forward, or it's pretty tough to run business. But the fact that it is optimistic, I think, is a good sign. Again, as Haley mentioned earlier, the fact that overall employment and economic growth here in the Ninth District generally has lagged the overall national average. And in terms of how to think about these results in relation to that, the national economy has been fairly strong, but it is forecast to slow from those strong levels. And it seems to me that the district firms are suggesting that the activity up here in the Ninth District is kind of following a similar direction. So before we get to a Q&A portion, I do want to hand it back to Haley, who's going to give just a little bit more information on some future surveys that you might be interested in.
Great. Thanks, Ron. So in addition to the general business survey, we also survey businesses across a variety of sectors. We have a monthly business pulse survey to track business conditions on a more frequent basis coming up later this month, and a construction survey coming up in April. None of these surveys would be possible without the support of our survey partners. Our partners span the Ninth District and come from organizations like chambers, economic development centers, and state agencies, and more. These partners help distribute our surveys to their business contacts so we can get a greater understanding of current economic conditions. If you're from an organization that would like to become a partner on future surveys, or if you're a business owner that would like to take these surveys, please scan the QR code on your screen or click the link I sent in the chat to sign up. So with that, we do have some time for questions. If you have a question, please type them in the chat box on Zoom. Let's see, let's start with this one. Regarding the negative impact of the warmer winter on tourism and other businesses, what does it say overall about consumer spending trends?
Right. That's a great question, and I would only have a few thoughts on that. Generally, these would be my thoughts, and not those of the Minneapolis Fed. What I generally hear first, I think we have to understand that there's always substitution. So if I didn't get to take that snowmobile excursion to northern Minnesota, I'm still probably spending that money somewhere. So as we think about consumer spending, we have seen it decline modestly. I would call it maybe flat right now because there are different pressures going on. But generally speaking, it's been robust during the pandemic. What I am hearing too, though, to speak more directly to kind of the tourism sector, is that I have heard that there's pretty good underlying demand, and this would be much more anecdotal, so I should note that up front. In that was recently in a meeting actually where there were a number of tourism folks who said that a number of things got canceled during the winter because of poor conditions, but that the underlying demand really seemed to be there, and that their expectations in the spring were really still quite healthy. So it doesn't look like people are not interested in having those vacations and doing the excursions and things like that. It's just right now the weather seems to be a really confounding factor in some of that consumer spending.
Great. Someone else also had a question about the weather. They asked, in light of the bad weather challenge for hospitality and tourism business, will the July survey that focuses on that sector be even more important?
Well, I think every survey is, I think, I'm a homer. I think every survey is really important because it seems like the economy is always at a point where you're looking for confirmation for something. Either you're looking for confirmation for pivots, or you're looking for confirmation that things are going to continue maybe as good as they are. And so any sector that is under pressure, I think we're going to be paying some attention. I have, as you mentioned earlier, Haley, we have a construction survey coming up in April. I'm very interested in that one. I've been interested in that one, well, forever, but that sector in particular is seeing some pressure. So I'm very interested going into the busy season what that survey will tell us. Similarly, when we do our hospitality and tourism survey in May, we'll be very interested in what that has to say about how people are recovering from the poor weather and looking into the summer season. And then the July survey that this will redo. Again, we'll get confirmation kind of across the board from construction and tourism and other firms that we get a much more broad look as well. So that's one of the reasons we're doing all these surveys, is we really want our hands in the local economy so firms can tell us how they're doing, so we have a better feel for how the real economy is performing.
Mhm. So someone else asked, on hiring, does your data reflect the loss of productivity that is recognized from our lack of ability to find quality candidates in professional services?
We don't have any good measures on whether or not firms are hiring the kinds of individuals they would like. We know that firms have had to make a lot of exceptions to their hiring practices, maybe accepting individuals that they otherwise would have been able to look over in the past because there just haven't been enough candidates in, now. There used to be many more candidates before, so you had more of your pick of the litter, so to speak. But our survey unfortunately can't grab anything like that.
Someone else was wondering that this is a little bit of a long one. There's some explanation here, so I'm going to
Okay.
read that. But that they wanted to say that they continue to hear the difficulties in hiring continue to be due to the difficulty of finding housing that would be affordable for the wages offered. In their region of northern Wisconsin, housing prices in many areas have nearly doubled over the course of the past 4 or 5 years.
Mhm.
So where someone may have formerly made $20 per hour in rural Wisconsin could afford a $120,000 house, now those houses are regularly 220K plus and higher rates, and the wages haven't kept up with these changes.
Sure.
Housing being such an important part of the average person's budget, therefore, has an abnormal impact on our region. Are there any new ideas or efforts that would lend relief towards these pressures?
Well, I don't have a good insight to the very last part, to the actual question part. What I will acknowledge is we hear this concern very, very regularly, and without a doubt, our labor force growth is going to depend on us getting a handle on housing issues and housing affordability. Our survey can't offer much to say about housing's impact on labor availability and hiring. But what I can say is we hear about it very, very regularly that people might be interested in taking a job. They can't seem to find housing in the location that they're finding, or that they're can't they are not finding housing in the location where their job is that they would like to take. And that is obviously a problem not only for the business, it's a problem for the individual, it's a problem for the community. So we are hopeful that that we can see that we can see more housing get developed. We understand that right now interest rates are not at a point where that is as conducive as it might otherwise be, but hopefully some of these things will start to work themselves out and we will get more housing built. We know that that's a problem.
Mhm. Now, we also got a couple questions about the election season, so I'll start with this one. Are you seeing any economic concerns from Ninth District businesses looking ahead to the presidential election?
I am gonna uh, respectfully pass on that particular question. We know that elections matter, but in terms of how it influences monetary policy, I think that's probably left for somebody like Neil to answer, and not for me.
For sure. And then the other question was just wondering if there's a correlation between people's concern about government taxes and regulation with the presidential election year and how they're
Again,
responding.
yeah, what I would say to that is, I think there are always concerns from businesses about regulatory and other governmental taxation. Whether or not the recent blip that we saw is a kind of a growing concern, yeah, I would go back to the earlier person's comment. It's another thing that we will kind of start paying attention to. Again, I don't want to say returning to normal would be a good thing, because or businesses struggling with government regulation and taxes is not a good thing, but it would be a kind of a return to what we were seeing in our surveys kind of pre-pandemic as well.
Yeah, got it. And it looks like we have time for one last question. Someone was wondering, how do you reconcile surveys with actual economic results? Seems that human nature is to respond to a survey with more negative outlooks or challenges, response bias.
I think that's an excellent point, and it's why we also point out that this is not a scientific survey. I think it's an excellent point, an excellent question. It's one of the reasons we do the survey is we are always kind of trying to triangulate both the anecdotes that we hear as well as the data that we get from government sources. And that data tends to be a little bit more lagged. So especially using kind of all of those, kind of the in-person interviews or conversations, these surveys, the government data, I think help give us a much richer view of what's actually happening on the ground. The other thing I'll point out is that this survey now, we've been doing this particular one now for just about 4 years, and we have gotten literally tens of thousands of comments. And those comments also, you can read the data, but you can also kind of read below the data in listening to what people have to say about certain things, whether it be the workforce challenge or inflation challenges or their revenue or profit challenges. So this survey, while it's not scientific, really does give us an awful lot of granular and qualitative data, as well as, I don't want to say quantitative because it's not data like government data, but it really is a useful snapshot for us to help understand kind of what normal businesses are experiencing. And yes, I do think there's probably some negativity bias. People like to let you know that they're in pain when they are in pain. We saw that. That's one of the reasons why we saw really strong survey responses when we first started this during the height of the pandemic. But again, I think we are able to kind of because we're using this as a snapshot, I think we don't ever read too much into our survey results, but that we want to share it with others so they get a little bit better and deeper idea of what's going on in their economy.
Great, thanks, Ron. And that was our last question for today. So thank you all so much for joining us. More information will be in our follow-up email to this event. And with that, I hope everyone has a great day.